Welcome to the deep dive. We're jumping straight into a major global shift today.
Yeah, a really big one.
It's this move away from, those super efficient, interconnected supply chains we all got used to.
Right, towards something different.
Exactly. A model that's much more shaped by geopolitics, by security concerns.
You hear that phrase a lot now, two systems, two supply chains.
We do. And our goal today is really to unpack what that actually means for everyone listening.
We've got some pretty comprehensive analysis to draw on, looking at this whole global realignment.
Right, across a whole range of industries. We're going to try and break down this complex transformation.
Pinpoint the key players, the trends.
And maybe reveal some surprising ways this is changing the world around us.
Mm-hmm.
Without getting totally bogged down, hopefully.
Don't try.
Because, understanding these big shifts isn't just for experts anymore, is it?
No, not at all. It affects everyone.
Whether it's your job or you're just, curious about where things are heading, getting a handle on this is crucial.
Think of this as a shortcut, maybe, to the important stuff.
Exactly. A shortcut to what truly matters.
And what's really striking here is how these supply chains, which sound maybe a bit dry,
A good abstract, yeah.
they've moved from just being in the business pages to being central to international relations. It's fundamental now.
So it's not just about how we trade widgets anymore.
Not even close. The sources we're digging into, they really emphasize it's about power.
Yeah.
It's about national resilience.
Resilience, yeah.
Yeah.
The ability to withstand shocks.
Exactly. And even sovereignty, in this world that's super connected, but also kind of fracturing along new lines.
Okay, let's start unpacking that. The analysis mentions something called the Great Decoupling.
Mm-hmm.
What are the big forces pushing us away from that single global system?
Well, the analysis points to three really key drivers.
Okay.
The first, and maybe the most obvious one, is that strategic competition between the U.S. and China.
Right, the big rivalry we hear so much about.
Yeah, and it's not just economic. It's tech leadership, military strength, global influence, the whole package.
Got it. What's number two?
The second big one was the COVID-19 pandemic.
Ah, yes. That exposed a lot.
It really did. It just showed how vulnerable we were, relying on these really concentrated global supply chains.
We all remember the shortages. PPE.
Yes.
Chips.
Exactly, everything. It forced a major rethink about that whole just-in-time efficiency model.
Putting cost above everything else, maybe.
Precisely. And the third factor, the war in Ukraine.
How does that fit in?
Well, it's another stark reminder of how geopolitical instability can just completely shatter trade routes, cut off vital resources.
Or like energy, food.
Yeah. So all these things together, they've shown that these purely commercial supply chains, they can be disrupted easily.
And even used as leverage.
Definitely, as instruments of power in disputes.
So out of these huge shifts, this two systems idea emerges. Can you sort of paint a picture of what those two systems look like based on the sources?
Sure. So the analysis describes first a U.S.-led bloc.
Okay.
This group is generally characterized by, democratic governments, a commitment to open trade, though maybe more selective now.
Right, friendshoring and things like that.
Exactly. And secure infrastructure, both digital and physical. Think alliances like the Quad, the G7. They're seen as key parts of this system.
And the underlying approach.
It tends to favor market solutions, interdependence, but with this growing focus on working mainly with trusted partners.
Okay, that's one side. What about the other?
Then you have China's bloc. This system is heavily influenced by state-led industrial policy.
Much more top-down.
Very much so. Plus, significant ties built through things like the Belt and Road Initiative.
Right, the infrastructure projects.
And developing its own quite distinct digital ecosystem.
So different priorities there.
Definitely. The focus is more on achieving scale, keeping tight control over key industries, and building strong links with the global south.
So it's really a clash of models.
Fundamentally, yes. You've got one prioritizing democratic values and, relatively open trade, versus another prioritizing state control and self-reliance, even if efficiency takes a hit.
But the analysis also says it's not quite that simple, right?
Yeah.
It mentions multipolar actors.
Ah, yes. That's a really crucial point. You can't just divide the world neatly into two camps.
Who are these actors, and how do they complicate things?
Well, we're talking about a significant number of countries, including big ones like India, Brazil, the UAE, Vietnam.
Okay, major players.
Right. And they're strategically choosing not to align fully with either the U.S. or China. They're maintaining autonomy.
Hedging their bets, essentially.
Exactly. Strategic hedging. They're engaging with both systems, often selectively.
Depending on the industry, maybe. or this project.
Precisely. A country might want Western tech investment for manufacturing, but still use Chinese firms for, say, building railways.
So it creates a much messier picture.
Much more layered, much more complex than just two blocks. These actors are using the competition to their advantage.
Oh, so
They're leveraging it to attract investment, get technology transfers, diversify their trade. They don't want to be forced into a binary choice.
makes sense. Which leads to the big question then. Is this the end of globalization as we knew it, or something else?
Yeah, that's the core question. The analysis suggests it's less an end and more a really significant evolution.
An evolution, how?
Well, that model of hyper-efficient, purely cost-driven global trade, that's definitely fragmenting.
Okay.
But interdependence isn't just vanishing, it's being reshaped, filtered through new lenses.
Lenses like trust, security, geopolitics.
Exactly, those. There's a clear shift in priorities away from just pure efficiency towards security and resilience.
So that old idea the world is flat is kind of...
It's giving way to a world of more distinct industrial and economic blocks, yeah.
And this global reset, as the analysis calls it, it's not just talk, right? We're seeing actual policy changes.
Oh, absolutely. Very tangible changes. Governments are intervening to reshape supply chains in ways we haven't really seen for decades.
Like what?
Well, look at the U.S. You've got export controls, the GPS Act.
That's right, the semiconductor funding.
And the Inflation Reduction Act, the IRA, all clearly prioritizing national interests in strategic sectors.
Right, China.
China's got its dual circulation strategy. Big focus on strengthening the domestic economy while still engaging globally, but more selectively.
So these are having real impacts on investment, on trade flows.
Definitely. These aren't just abstract concepts. They're moving billions of dollars.
And it's particularly visible in certain industries, I gather.
Yes, especially strategically sensitive areas. Think semiconductors, obviously.
Yeah.
AI, EV batteries, telecoms.
The commanding heights, so to speak.
Pretty much. That's where the competition for tech dominance and national security is fiercest.
And we're seeing this ally shoring idea take root.
Yeah, the West is actively trying to source critical stuff from trusted partners. India, Vietnam, Mexico, Poland are often mentioned.
While China builds ties elsewhere.
Right, strengthening links with the global south, often through things like the digital Silk Road.
And companies are adapting too.
They have to. We're seeing many operate dual supply chains now.
Meaning separate ones for the West and for China Global South.
Exactly. It costs more, obviously.
But it reduces risk.
That's the calculation. Increased costs for better resilience and less geopolitical exposure. So, yeah, you might see more made in Vietnam or made in Mexico labels.
And those middle power countries we mentioned, India, ASEAN, the Gulf states, they're key here.
Hugely important. They're strategically positioned to benefit. Both blocs are courting them.
Giving them leverage.
A fair amount, yes. To negotiate better investment terms, get tech transfers, diversify trade. They're trying hard not to get locked into one side.
It's interesting how ideology weaves into this, too. It's not just where things are made.
But how they're made and the values behind it. That's a growing factor.
Can you elaborate on that?
Well, the analysis points out that the U.S. and its allies often emphasize things like transparency in sourcing, ethical labor, working with democracies, whereas China's approach might prioritize speed, scale, and alignment with state policy.
So supply chains start reflecting national values.
Increasingly, yes. And this can lead to regional clusters forming with their own rules and preferences.
So the big picture shift is away from just pure efficiency.
Towards optionality, resilience.
Having backups, basically. Ensuring you can still get essential goods even if things go wrong globally.
Precisely. Governments and companies now prioritize functioning under stress. Resilient supply chains are seen as vital for national security.
So just to reiterate, it's not deglobalization entirely.
But a more strategically built, maybe more fragmented form of globalization, based on trust and control, not just cost.
Okay, let's dive into one of those key sectors, semiconductors. The analysis calls it a semiconductor Cold War. That sounds dramatic.
It is pretty central. Semiconductors are just foundational.
For everything.
Pretty much. Consumer tech, advanced weapons, AI, everything runs on chips, so control over them is hugely strategic. Hence the chip war or Cold War framing.
And the landscape is quite concentrated, isn't it?
Very much so. The U.S. is still dominant in chip design and the specialized tools needed to make them think NVIDIA, Intel, AMD, Qualcomm.
Right.
Yeah.
But not necessarily in manufacturing the most advanced ones.
Correct. That's where Taiwan's TSMC and South Korea's Samsung lead, which makes East Asia a massive geopolitical focal point.
And there's that one Dutch company, ASML.
Yes, ASML. Crucially, they're the only maker of the extreme ultraviolet, the EUV machines, needed for the most cutting-edge chips.
Wow. And where does China fit in?
China's investing massively, but the analysis says they still lag significantly in making the most advanced chips and in the critical design software, the EDA tools.
So, given that picture, what are countries like the U.S. actually doing
Well, the U.S. has put significant export controls in place.
to limit China's access?
Exactly. Access to advanced tech, high-end GPUs, sophisticated manufacturing gear, and allies like Japan and the Netherlands are involved too.
And at the same time, trying to bring production back.
Yes, that's the reshoring push. The GPS Act in the U.S. is pumping over $50 billion in incentives to build new factories or fabs.
Where are these being built?
States like Arizona, Texas. You've got TSMC, Intel, Samsung, all setting up major new operations there.
And Europe's doing something similar.
Yep, the EU Chips Act, same goal. Boost domestic production, reduce reliance on East Asia, ensure a more secure supply.
How's China reacting to all this pressure?
They're doubling down, essentially, pouring even more money into their domestic industry to achieve self-reliance.
Focusing on specific companies.
Yes, state champions like SMIC, memory makers like YMTC, EDA software firms. A huge push.
But they still face challenges.
Significant ones, especially at the leading edge. But they're also focusing strategically on areas like older legacy node chips, memory, packaging areas that are still vital and where they're stronger.
So it really is creating this divided landscape.
It is. You've got the West building these secure ecosystems with allies. China's creating a parallel stack, focused internally and on the global South.
And those middle powers getting courted by both sides.
Absolutely. It's clear that in this semiconductor Cold War, controlling chip tech is seen as key to future economic and military power.
Okay, let's shift to another vital area, artificial intelligence. The analysis talks about an algorithmic divide. What's driving that?
AI is just central. It's seen as the core tech for future growth, national security, and military edge.
The new electricity, some say.
Right. And this algorithmic divide comes from that intense U.S.-China competition, but also from really different ideas about how AI should be built and used. Ideology plays a big part.
So where do the U.S. and China stand right now in this AI race?
Well, the U.S. generally leads in foundational research, especially things like large language models and the underlying infrastructure.
Like cloud platforms, GPUs?
Exactly. NVIDIA's GPU dominance is huge. Plus, a strong research and VC ecosystem really fuels innovation.
But China's catching up fast.
Very fast. Driven by huge state investment in their national AI champions Baidu, Alibaba, Tencent.
And their strengths are maybe more in application.
Often, yes. Areas like facial recognition, voice tech, e-commerce, they benefit from massive data sets and strong government push for AI integration.
And this is where those ideological differences really surface. You mentioned privacy, ethics.
Precisely. The U.S. approach generally emphasizes things like open access, data privacy, ethical guidelines.
Where is China?
The approach there tends to prioritize state control. Censorship and surveillance capabilities can be built right into the AI systems.
So the actual AI looks different.
It can, yeah.
Wow.
Think about recommendation engines, how facial recognition works, how data is used. The underlying values shape the technology.
And just like with chips, export controls are a factor in AI too.
Yes, the U.S. controls on high-end GPUs and AI chips, mainly hitting NVIDIA, are designed to limit China's ability to train the biggest, most advanced models.
Forcing China to adapt.
It spurs them to invest more in domestic alternatives and seek partnerships, often in the global south, for computing resources.
And the rules are fragmenting too. AI governance.
Definitely. You've got the EU AI Act, U.S. executive orders, China's rules, creating different, sometimes incompatible ecosystems. Companies operating globally have to navigate all that.
This algorithmic divide sounds like it has really deep implications.
Oh, absolutely. The analysis stresses this isn't just about who has the best tech. It's a fundamental conflict.
Between what?
Between openness and control, privacy and surveillance, commercial value versus state power. And as AI gets woven into everything, this divide will shape how we live, work, even think.
Okay, let's pivot to something maybe less high-tech sounding, but critical. Rare earths and strategic raw materials. Why are these so important?
They might not be household names, but these rare earths and minerals are absolutely essential building blocks.
For what kinds of tech?
So much modern tech. The magnets in EVs and wind turbines, special alloys for defense, components in smartphones, semiconductors, the list goes on.
So controlling the supplies, is pretty powerful.
Hugely powerful. Access to these materials gives nations significant economic and military leverage.
And the analysis suggests one country has a lot of that control right now.
Yes, China dominates the global rare earths supply chain, over 60% of production and a massive 85% plus of the refining capacity.
Wow, 85% of refining.
Yeah, and that control extends to other critical minerals too. Lithium, cobalt, graphite for batteries, even if the actual mining happens elsewhere. China strategically invested over decades to control extraction and, crucially, that midstream processing.
Which creates a major vulnerability for everyone else.
A huge one. The analysis points out that China hinted at restricting exports during past trade tensions.
Setting off alarm bells, I imagine.
Big time. Suddenly, Western nations realized just how reliant their key industries were on a single competitor. That sparked an urgent push to diversify.
So what are the West and others doing to reduce this dependence?
There's a big global effort now, investing in non-Chinese supply chains.
Like what?
Well, Australia's Lynas Rare Earths is getting U.S. support to expand refining outside China. India and Japan are collaborating. The EU has its Critical Raw Materials Act.
Trying to build alternatives.
Exactly. And India, with its own potential reserves and strategic neutrality, is seen as a possible alternative supplier. They're offering incentives to boost production.
But it's not just about mining, right? Processing is the tricky part.
Absolutely. Mining is just step one. Refining these materials into usable forms is complex, expensive, and can be environmentally damaging.
And China excels there.
They do, partly due to past subsidies and, frankly, sometimes lower environmental standards. So building new supply chains means tackling that processing challenge.
Yeah.
More investment in R&D, innovation in recycling, greener extraction methods, creating a more circular economy for these minerals. It's a multi-pronged effort.
And it sounds like a new geopolitical scramble is underway in resource-rich countries.
Definitely. Intense competition in places like Congo for cobalt, Bolivia for lithium, Indonesia for nickel. Firms and governments racing for deals.
You even hear talk of critical minerals OPEC.
Yeah, that idea is floating around as resource-rich nations realize their leverage is growing. The bottom line is, these minerals are now instruments of power. The race for them is fundamental to geopolitical competition.
The analysis also looks at pharmaceuticals and biotech, framing it as national health security. What prompted that shift in perspective?
The pandemic was the huge wake-up call here.
Right. Supply chain issues again.
Big time. It exposed just how much many nations, even wealthy ones, relied on China and India for essential stuff, APIs, the active ingredients in drugs, generics, PPE.
And when those supply chains broke down,
Countries scrambled for basic medical supplies. It was a stark lesson. Pharma isn't just about health or economics, it's core national security. The ability to make your own medicine or source it reliably became paramount.
what led to that concentration in China and India historically?
Mostly cost efficiency, really. For years, Western pharma firms outsourced API production to China for lower costs.
And India for generics.
Right. India became the pharmacy of the world due to its massive generic drug capacity, often helped by large-scale and maybe looser regulations initially compared to the West. Cost savings drove this concentration.
So, post-pandemic, what's the response? How are Western nations reacting?
There's a definite push to build more resilient, diverse pharma supply chains. The U.S., Japan, the EU are all investing significantly.
In what specifically?
Reshoring manufacturing of critical drugs and APIs, expanding domestic biotech capabilities, stockpiling essentials. Think the U.S. Defense Production Act, the EU's HURA authority.
It's government intervention again.
Yes, boosting domestic capacity not just for pandemics, but also biodefense, next-gen therapies.
And how are China and India, the incumbents, positioning themselves now?
Well, China's definitely accelerating its own biotech ambitions, mRNA, CRISPR, synthetic biology. They use vaccine diplomacy strategically, too. But India's leveraging its existing strengths, attracting investment from both East and West, trying to reduce its own reliance on Chinese APIs, expanding in vaccines, biosimilars, contract manufacturing. Companies like Serum Institute, Bharat Biotech, Biocon are major players.
So even in health, we're seeing this divergence based on the two systems.
Absolutely. The analysis notes different governance models. The West emphasizes stringent trials, ethics, oversight.
And China.
Sometimes prioritizes speed to market, and there can be integration of health data with state surveillance. It creates a split in standards. in the geopolitics of health.
So the takeaway is,
Pharmaceuticals are now strategic assets, tools of influence. National health security means controlling the capacity to create and make cures.
okay, let's shift gears to the auto sector. It's going through this massive EV transition. How's that reshaping supply chains and geopolitics?
The move to EVs is completely transforming the auto industry. It's not just about the car itself, but the entire industrial ecosystem and the geopolitical map.
Because EVs need different things.
Totally different. Heavy reliance on batteries, power electronics, semiconductors, rare earth magnets. This creates entirely new dependencies and power dynamics.
And the analysis points to China having a strong position in these new EV chains.
A very strong position, yes. Dominance in large parts of it, battery production, refining lithium and cobalt, making electric motors, many components.
Plus, their own EV companies are big players.
Right. Vertically integrated giants like BYD, NIO, XPeng, plus the battery maker CATL, often with strong state backing. It positions China as potentially the global EV hub.
How are Western automakers and governments responding to that?
They see the vulnerability. So policies like the US IRA provide big incentives for non-Chinese EV and battery content.
Trying to build up domestic supply chains.
Exactly. The EU is investing heavily in gigafactories for batteries, seeking alternative mineral sources. The goals are reducing dependence, creating green jobs, keeping tech autonomy.
And the legacy automakers are involved.
They have to be. Ford, GM, VW, Stellantis are all localizing battery production, often through joint ventures. Tesla's also localizing more production outside China.
What about other players, like India?
India has big ambitions. Wants to be an EV hub for the global south, using subsidies, localization rules, fostering startups like Ola Electric, Ather Energy, looking for domestic lithium too.
The analysis also mentions software becoming key in cars. How does that fit the geopolitical picture?
As cars become software-defined, needing chips, OTA updates, AI, cloud integration, it adds new layers of dependence.
U.S. leads in a lot of that software.
Generally, yes.
No.
But China's building its own parallel in-vehicle ecosystems too. Think Huawei, Baidu.
So this pushes towards more regional auto industries.
It seems so. More regional clusters, North America, Europe, China, maybe India, tailored to local rules and geopolitics. Deglobalization in action.
So the car is becoming more than just transport.
Definitely. The analysis frames it as a platform of power, surveillance, industrial sovereignty. Whoever controls the supply chain under the hood holds a lot of cards.
Let's broaden out to industrial manufacturing in general. The analysis talks about a shift from just-in-time to just-in-case. What's behind that?
For decades, just-in-time, or JIT, was the mantra. Lean, efficient, minimal inventory rely on smooth global flows.
Cutting costs to the bone.
Exactly. But recent disruptions, the pandemic, geopolitical friction showed how fragile that model is.
So the focus shifts.
To just-in-case, or JIC. Prioritizing resilience, redundancy, flexibility over pure cost savings. The risk of relying on single, distant suppliers is now seen as too high.
And how are governments and companies actually doing this? What's the strategy?
We're seeing a big comeback for industrial policy, governments actively trying to strengthen domestic manufacturing.
Like the U.S. chip test and IRA we mentioned.
Yes, and the Defense Production Act. Similar efforts in Europe, Japan, India, all aiming for more strategic autonomy, less reliance on potentially shaky sources.
And companies.
They're looking seriously at reshoring, nearshoring, friendshoring critical production, moving it closer to home or to allied countries.
How's China adapting?
Through that dual circulation strategy, boosting domestic demand, investing heavily in automation, robotics, local innovation to build internal resilience.
And this creates opportunities for other countries.
Absolutely. Emerging economies like Vietnam, Mexico, Indonesia, India are benefiting from the China plus one trend.
Firms diversifying away from just China.
Right. India's PLI schemes, the production-linked incentives, are designed specifically to attract that kind of investment across many sectors.
Technology must be playing a role in enabling this shift, too.
A huge role. Smart factory tech, IoT, AI, digital twins, 3D printing makes localized, high-precision manufacturing more feasible.
And automation helps offset labor costs.
Yes, making it more viable to bring manufacturing back to developed economies.
Right.
But it creates new challenges.
Like needing different skills.
Exactly. Skilled workers in mechatronics, software, AI are crucial. Countries with strong vocational training might have an edge.
So the big picture for manufacturing.
It's now a core part of national strategy. Supply chains are being redesigned for security and political alignment first. Resilience is the new efficiency.
Okay, let's turn to energy security, another critical area feeling the impact of this fragmented world. How are energy supply chains changing?
Energy security used to be mainly about affordability and diversification. Now it's increasingly about alignment, control, resilience.
Reflecting those two systems.
Definitely. We're seeing parallel energy supply chains emerge along those geopolitical fault lines.
Can you give examples in specific energy sectors?
Sure, take oil. Sanctions on Russia have really split global flows. Russia sends more crude east to China and India.
While OPEC Plus seems more independent.
Yeah, OPEC Plus seems to be charting its own course more, maybe less aligned with traditional Western interests, so you get diverging corridors.
What about LNG, liquefied natural gas?
Similar regionalization. The EU is rapidly building import capacity to replace Russian gas, looking to Qatar, Australia, the US, investing heavily in its own import terminals, securing deals with Russia, Iran, Turkmenistan, again, separate spheres.
Even coal, isn't that supposed to be phasing out?
Globally, yes, but it remains a geopolitical buffer, especially for China and India, who are boosting domestic production. Indonesia, a big exporter, tilts more towards Asia now. Western divestment deepens Asian reliance.
And nuclear energy.
That's where energy and security really intersect. You've got the traditional Western suppliers, US, France, Japan, competing with Russia's Rosatom, which is dominant in the developing world.
And China's getting involved too?
China's exporting its own tech now, investing in fusion, suggesting dual nuclear supply chains could emerge too.
It really highlights how energy decisions are now deeply geopolitical.
Absolutely. Energy supply chains are strategic tools now, key parts of a nation's geopolitical stance in this fragmented world.
The analysis then brings back those middle powers, talking about multipolarity within bipolarity. These countries hedging their bets.
Right. This growing group, India, Indonesia, Brazil, Turkey, UAE, South Africa, Mexico, others, they're choosing not to just pick a side.
Strategic hedging again. What's the goal?
To leverage the superpower rivalry, gain agency, attract investment from both sides, shape norms, avoid overdependence. It's pragmatic in a world with overlapping supply chains.
Can you give specific examples of this hedging in action?
Think about India. Member of the Quad with the US, Japan, Australia, banned some Chinese apps, courts Western chip makers.
But also
Also a member of BRICS with China and Russia, trades heavily with China, imports critical components from China. It's playing both sides for strategic autonomy.
and the Gulf states.
Similar story. Strong security ties to the US, but deepening economic links with China, Huawei 5G, trading oil in yuan sometimes, sovereign wealth funds investing in both East and West. They want to be bridges, not extensions.
ASEAN countries too.
Generally, yes. Welcoming Western investment while maintaining huge trade volumes with China. Brazil, South Africa, embedded in China's commodity networks, but diversifying financial and tech links.
So they're aiming for flexibility, autonomy.
Precisely. And this hedging extends beyond just trade and investment
How so?
into currency strategies, more bilateral trade in local currencies, exploring alternatives to SWIFT, looking at CBDCs for financial resilience, reducing dollar dependence.
And even regulations, digital rules.
Yeah, developing hybrid frameworks.
Yeah.
Combining elements from different models like India's approach to data laws. They don't want to just copy-paste from the US or China.
So these middle powers are actively shaping this new order.
The analysis calls them geo-economic choreographers, shaping a world of parallel supply chains. Strategic hedging is like a new non-alignment for a complex era, trying to rebuild the global order on terms that suit them.
Let's move to the digital realm, another key battleground. The analysis contrasts China's digital Silk Road with a Western digital NATO. What's at stake here?
The digital space infrastructure, data, cyberspace is absolutely critical for power now, and there's a clear clash emerging.
Starting with China's digital Silk Road.
Right.
What is that exactly?
It's China exporting its entire digital model 5G from Huawei, smart cities, surveillance tech, cloud services from Alibaba, AI, fintech mainly to the global south.
Often with financing attached.
Yes, often bundled financing, long-term contracts. This embeds Chinese tech, standards, and norms, raising Western concerns about digital colonization.
So what's the Western response, this digital NATO?
It's maybe less a formal alliance, more a collection of initiatives promoting openness, privacy, democratic governance online.
Like what?
Things like the EU's Global Gateway, the US-led PGII offering alternatives for finance and tech, encouraging use of Western or allied firms, Cisco, Nokia, AWS, Microsoft Azure.
But it goes beyond just the physical pipes and servers, right? It's about data, governance, values.
Exactly. That's a core divergence. China emphasizes cyber sovereignty, state control over content, often requires data sharing.
While the West focuses more on
User rights, privacy, transparency, think GDPR in Europe, various US frameworks.
and this leads to a splintering internet.
It looks that way. Countries choosing tech stacks based on geopolitics. Huawei banned in some NATO countries, welcomed elsewhere. US and Chinese cloud giants expanding in different regions.
Even undersea cables and satellites are involved.
Increasingly politicized, yes. Security concerns about Huawei marine cables. China's Beidou versus GPS. Starlink's strategic role, it's all part of it.
So cybersecurity, digital ID, internet governance, they're all tools of statecraft now.
Absolutely. The battle over the digital rulebook shapes supply chains, alliances. It's a digital Cold War fought in the cloud and through code.
Finally, let's talk financial supply chains. The analysis asks if we're entering Bretton Woods III. What's prompting that question?
Finance is the bloodstream of globalization, right? The Bretton Woods system, dollar dominance, IMF, World Bank, SWIFT has been the bedrock for decades.
What is being questioned now?
Yes, especially after the weaponization of finance in 2022, freezing Russia's reserves, SWIFT bans, that triggered a major reassessment. Is the financial infrastructure really neutral? Can we rely on it?
Leading countries to look for alternatives.
Exactly. Building alternative rails, leading to talk of a Bretton Woods III, a new financial era.
What do these alternatives look like?
We're seeing China push its CIPS system as a swift alternative, piloting its digital yuan, the ECNY, for cross-border trade.
And the BRICS nations.
Discussing common payment platforms, more non-dollar trade like that India-Russia oil trade and local currencies.
So the dollar's dominance is eroding.
It's still dominant, but the trend is towards diversification, regional systems, sovereign digital money. CBDCs are part of that. Countries want more control, maybe guard against dollar exclusion.
And things like crypto and DeFi play a role.
Potentially. Digital assets, stable coins, blockchain, they offer alternative ways for cross-border trade, especially maybe for emerging or sanctioned nations. It challenges the traditional system from below.
And capital flows themselves are becoming more strategic.
Very much so. Sovereign wealth funds, China's CIC, UAE's Mubadala, Saudi's PIF, are investing strategically in tech, green energy, infrastructure, influencing startup ecosystems with clear geopolitical goals.
Financial rules are fragmenting too.
Yes. Divergent compliance, U.S. IPO rules for Chinese firms, EU ESG standards, China's capital controls, creating parallel capital markets, forcing firms to navigate dual structures.
So finance is no longer just plumbing. It's front and center in the supply chain debate.
Absolutely. Financial supply chains are now weapons, walls, pathways. Bretton Woods III, whatever it looks like, will feature competing financial blocks, digital infrastructures, sovereign strategies. Finance is now central, where trust and power intersect with economics.
So pulling this all together, this deep dive really highlights a world in fundamental reshaping.
Yeah, this move towards two systems, two supply chains, isn't just tinkering. It's a massive shift, driven by deep geopolitical and security worries.
But as you've emphasized, it's incredibly complex, not just two neat blocks.
No way. You've got these two main poles emerging, but the actions of all those other multipolar countries, plus the nuances within every single sector, it creates a really dynamic, intricate landscape.
And these huge global shifts, as we've discussed, they have very real impacts on tech, on economies, on our daily lives.
Definitely.
We really hope this conversation has given everyone listening a clearer, maybe more nuanced handle on these powerful forces.
And how they might affect your work, your interests, or just how you understand the world changing around you.
Which leaves us with a final thought to mull over.
Yeah, a provocative one perhaps. In this world where supply chains are the new battlegrounds, what does genuine resilience actually look like?
For individuals, for businesses, for nations.
Exactly. And maybe just as importantly, what hidden dependencies, what overlooked vulnerabilities might still exist in this evolving, fragmented landscape? Something to think about.